This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Here are your TF Metals Report podcast highlights for the first week of February 2021. As the week began on Monday, February the 1st, we're off to a hot start with the hashtag Silver Squeeze still trending on Twitter. A lot of talk that day about silver, the acquisition of physical metal, and whether we can acquire enough to actually start to put some leverage against the banks. Well, we'll see about that. But as the week began, silver was our focus. This is what we're watching in silver. Mentioned this yesterday. I think I mentioned it on Saturday as well. Back when we made these highs in early August 6th and August 7th. The front month was the September contract, okay? The September contract high of the whole year last year was $29.92. So there's your first number you got to watch. But we're in the March contract now. How high did the March contract get last year? On a closing basis, the closing high you see here was $29.70 on August the 7th. Intraday high was $30.39. So I can assure you, talk about this virtuous cycle of, inflicting more and more pain on the shorts, that really gets more acute above $29.70, $29.92, and then $30.39 on a daily close, and even more importantly, above $30.39 on a weekly close. All right, so watch those levels closely. But the banks which monopolistically control the COMEX silver price and are always net short of silver, well, they're familiar with those levels as well. So it shouldn't have been any surprise that after another CME Group margin hike for COMEX silver on Monday, here came the banks on Tuesday, and price was driven dramatically back downward. Okay, silver on the daily chart. Again, just wanted to show you this. Before today, at the close, as I mentioned repeatedly again yesterday, at the close yesterday that I've repeated. Anyway, you get the idea. 4 red candles, now 5. All of them, the smallest one's $1.96 back there on November the 9th. All of those massive red candles, not a peep out of the frickin' co-conspirators at the CFTC. 1 green candle, and we want you to know we are surveilling the integrity of the markets for fraud manipulation. Okay. So you're worried about that on a $2.50 up move yesterday, but crickets on a $3 down move today. Tells you everything you need to know. You need to know nothing more about the corruption of the system. But if you want to read more, read the link on this page, TF Metals Report link from September of 2019, I believe. I think that's when it was, called Abject Corruption. Boy, then you'll really be down the rabbit hole with me and disheartened and everything else. But we're going to win. Maybe that sounds pie in the sky. I'm not giving up, and I hope you're not either. On Wednesday, our focus returned to COMEX Digital Gold, which had our concern because every single time it had rallied during the silver squeeze, it was immediately reversed and turned back lower. So with that in mind, we took a good long look at the daily gold chart on Wednesday, February the 3rd. So what's going to happen to the metals? Well, silver we'll leave out of the picture for now because it's got its own little stuff it's got going. But gold, if we go from 91 to 92 this month in the dollar index, and if the yield on the 10-year note goes from 114 to 124, we're going to have a hard time in gold. Regardless of how great the earnings are, they're going to sell the crap out of the miners and beat them down toward, the GDX down toward 32. So, this is a cautionary tale here, okay? Let's see here. Let's look at the gold chart while we're at it. Where would we find support? Well, again, remember, the purple line is your bull flag line. That's the one we tried to break out of as the year began, and we got crushed back down, which, of course, that didn't bother the CFTC. And then we rode the red line. What was the red line? Well, it's an adjustment of what was the primary downtrend line all the way to the middle of December. You remember we had the pennants and the wedge and smash, smash, smash. Okay, I adjusted it because I now draw that red line perfectly parallel to the purple line. And you can see how valid it is. Catches that little peak in the middle of September, catches the peak in the middle of October, catches early December, and then we found support later in December. And then after we got smashed back on the 8th of January, 1, 2, 3, 4, 5, 6 days in a row, finding support on that red line. So, again, if you're looking for a dip to buy, if you're looking for, outside of this 1825 level-ish, outside of that as support, it's this red line. And as we go toward BS Friday, and, if we get the dollar to rally and we get the bond market to sell off, where do we look for support? We look for it on this red line. And as you can see, by early next week, it's going to be at 1800. I mean, I don't want to go there. But again, I'm trying to mentally prepare you that that's at least a possibility. And unfortunately, prices were hit again on Thursday, February the 4th. But we tried to take a big picture view and discuss how silver has been leading gold in the hope that maybe gold might soon double bottom and follow silver back up. We'll see, but on Thursday, February the 4th, our focus again was COMEX digital silver. Finally, like I said, silver leading gold. You can see the double bottom on here from September 24th and again November the 30th. And the trend line, especially in, the last 3 weeks in January, prior to this week, we've been riding that trend line higher very nicely. And they had this crazy stuff from earlier this week, but then here we are. There's nothing about it. It's broken out of its own bull flag, the purple line, back in December. So what we want silver to do, obviously, is stay above 26. So I know they're going to probably take another stab at it. We want to successfully stay above 26. You know how important that level is, especially on a weekly closing basis. But we want to stay above this blue line, too, which is also, by tomorrow, pretty close to 26. So you know what you need to watch. And on Friday, February the 5th, we finally bring an end to what has been a long and volatile week. An old adage we've had at TFMR since we began in 2010 is that you always want to be careful about any moves that begin on Monday. It's not how you begin the week that matters, it's how you end it. Because the weekly charts are what really matter to determining the intermediate and sometimes even longer term trend. To that end, on Thursday, we began to notice that gold was in the process now of potentially double bottoming. Silver has led gold now for months, and silver double bottomed at $22 back on November the 30th. Well, gold put in its first bottom at $17.80 on November the 30th, and looks like it might have put in a double bottom yesterday at that same level. Between September 24th and November the 30th in COMEX silver, there were 46 trading days. Between November the 30th and yesterday in COMEX gold, there were 45 trading days. So a key level that we are watching into Friday's close is not only just back above 1805, but back above the important 50-week moving average for COMEX gold, which you'll find today at about 1809. If you believe that the long-term trend remains unchanged for gold, and if you believe in the long-term fundamentals for gold, then you'd expect the trend to continue. On multiple occasions, prices come down, dabbled with the 50-week moving average over the last 2 years, but rarely does it close below the 50-week moving average. Again, that level is 1809, and that's what we're going to want to watch through the close today. Thank you for listening to the TF Metals Report podcast highlights for this first week of February. We hope you're enjoying this service. Please give us a like and maybe a subscribe to whichever channel you find our podcasts each week, and we'll be sure to keep posting them for you. Have a great weekend, everyone.